Okay, good morning, traders, and welcome to Trade the Structure. So, a bit of a morning recap and overview. We're coming into the start of the new session in the Asian market session, start of a new week, and we're just going to review what happened overnight in the US session Friday, going into the end of the week. So now they've got a public holiday, so they've got a long weekend, which may mean we're not seeing as much bullish action today, but we'll probably be more range bound. We'll see how it goes. It could just kick off. At the moment, the market's looking fairly strong. The US has bounced back quite hard. Now, the thing that's kicking them on is a good, healthy economy or a good, healthy consumer. Okay, so at the moment they're still happy. The US consumer is brushing aside high inflation for now, and there's good signs potentially that the rate of increase of inflation is starting to slow. Okay, so there's all these sort of factors mixed in. The biggest thing in the US, the biggest thing for global markets, I guess, is that as long as we have got high inflation, as long as that it is getting brushed aside basically by the consumer, and that growth can continue in major stock markets anyway, and that's what it looks like at the moment. Economic numbers are pretty good, fairly strong. Things are quite consistent at the moment. There is signs that the US is starting to slow a little bit, but the consumer's their major one. Okay, so across the board, you look at the DAX. The DAX is rallying. All markets are having a big bounce back after what we've seen, that recent pressure with markets moving down. So we've got the whoop, just a second, there we go. So we're watching, start off with the S&P, and we'll just go through the major markets. So the S&P, you can see that it's had a good move down. It's a secondary leg down, and we're starting to bounce back. We found this little double bottom, essentially double bottom. We've had this big flush at 38.60, and now we're bouncing back. Now this is the anchor on the daily chart. The anchor to the move down was just here at 40.80. We're just broken through that. So for now, we're contracting that move down. It's where to? So we've got major levels up here. If we just mark that out, we've got another level just up here at around 43.05. We could be heading to that. We could be just starting to fail just above this 41.21 level. We don't know. Have to wait and see. But the US will be open again tomorrow night, so we won't see any action this tonight. You can see that move up is getting extended. So if you're going to continue longer term to go up, we may need to flush out some of these buyers, flush them out, build a high low, and then go again. Okay, and that brings in more buyers. Over the Dow. Then the Dow, this was the anchor to the move down. So you've got your lower highs holding here, lower high holding here. We've broken that at 32,550. Okay, so same sort of scenario. It is getting extended up here. The momentum is probably going to slow, but if it slows and it keeps consolidating and it slows and start to go again, yeah, we're going to take off. Okay, but either way, that's your move down. That's your daily move down off the highs, and we're just contracting this secondary leg down. Okay, it doesn't mean we could just get something like this. It doesn't mean that the downtrend on the daily basis is over. The daily basis, it's just contracting off the lows in a way. Okay, so your expansion down, contract you back up. It's just where to from here. If it does, keep grinding up and we start to test into these levels. Okay, if we grab that, start to test into these levels up at around 34.75, 175, sorry. And then we had this big pullback and build a key higher lows, maybe something like this. You need something, a big push up, flush out a lot of these sellers, pull back, drag in some buys, get confirmation with a higher low, and then we're going to see a deeper pullback. Okay, but we'll have to wait and see how it plays out. And NASDAQ was the strong one. Obviously, when you talk about inflation numbers cooling, that means maybe interest rates rises are not as going to be as harsh or as aggressive from the Fed. Then you're going to get a bigger move back into everyone's favorite in the tech stocks. Your FANGs, I just love them. So that's sort of been a proven formula for the last few years, is buy tech. Okay, and when you're talking up inflation and rate rises, that's where they've been selling tech hard. Now they're just buying some back, picking up bargains basically. But that anchor to the move down is around this zone here at 12,550. Okay, and that's just starting to break. We could trickle higher, continue to push out in this breakout zone, push up into here 13,125. Wait and see. Okay, but like the other two, that move up is starting to get extended. So we're starting to really, you got to pick where's it going to. Do you want to just jump in here before we get a pullback? I'd rather see it push up, have a bit of a pullback, see that high low hold, and then I think we're going to get a good move up. Okay, onto the DAX. DAX has been quite strong. We spoke about this a few times. Big sell-off, good bounce back. It's grinding its way back down. Started to, soak up on the way down. Soak up. Latest one was through that 13,600 before we started holding these high lows, and we're starting to extend up again. Okay, so for me, maybe we are heading to, that's kind of your leg up. Had a bit of a pullback here, and if we start to hold that, we might be heading up to, we might be getting into this zone up here. Before we fail again, we may just brush that aside and head straight up to 14,888. To me, that looks like we're going to start to push up to that 14 triple out. Now the ECB are talking up rate rises too, or the need to potential cool inflation, and it's the first time they talked it up for a while. But again, it's like the US scenario. As long as the economy is doing quite well, it's quite strong. We don't want to see those signs of slowing. When the economic numbers come out a lot worse than expected, and we've got high inflation, that's just going to really cool any growth. Okay, and then you're going to want to get out of your shares. Maybe a lot's been factored in already, and we're going to sort of bounce back a bit at the moment. So we'll wait and see on the UK. This level through here at 76.83, it's, if you look at the daily chart, it's died off that level quite a few times. Okay, now we're bouncing back. So we had this big sell-off here, it bounced straight back again before we had this flush. So that to me doesn't look too bad. Okay, looks okay. I mean, we've had a bit of a sell-off. This is a bit different to the US. Now these the FTSE didn't make the all-time highs. They kept hitting into this 76.83 level. Okay, reacting down off it. It kept fading off that level. At the moment, we've broken through this 75.40. That's, you wouldn't say downtrend, but there was a bit of a resistance zone through here, a bit of between this horizontal resistance and this, I guess, dynamic resistance zone at 75.40. It's brushed up through that, so I'd expect it to test back into 76.83. Okay, over to the Asian markets, we're looking at XJO to start with. Now, that's your first leg down, your secondary leg down. The daily anchor is right up here, okay, to this move down at 74.35. Now, we're still, to me, we're still on the downtrend. We're going to break higher today after a really good move up on the indices. Sorry, not the indices, the ASX 200 on Friday night and the SPY. Okay, the overnight markets really ramped higher, so they were contained during the day and they ramped higher. So there's going to be a big gap up. Okay, and the markets are doing that a lot, especially in the ASX. They were contained during the day. They'd make all their moves overnight when the futures can be bullied. Okay, the liquidity is a lot less. So if they wanted to move, they can easily ramp it on the futures. And then everyone looks at the futures market where it traded, where it was trading at 4 o'clock when they closed, where it finished at. The difference basically is what you're looking at opening up or down. Okay, and at the moment, I think it was up about 80 something points or something. It was quite a strong market on Friday night on the SPY. So expect a big gap up, but still, this trend is down. It's more to me of a longer term range. Okay, you've got major resistance up here, overhead resistance at 76.15, and the all-time highs kept fading off there. We got this fade off here, tried to go back up again, big sell-off, had to reset, hold a higher level, back up there again, and we faded. I don't like the look of it, to be quite honest, but it doesn't mean that we can't drift all the way back up to 76.15. We'll have to wait and see. It depends on what the US does. Okay, but it's all about this interest rate rising cycle. How are we going to take that? Okay, all the Fed reserves around the globe are basically letting this inflation run hot. Okay, people are spending more, but if people just stop and they go, that's enough, I've got to pay my bills. They stop spending, then you're going to see these economic numbers starting to slow. And I think that's down the track. It's just where are we going to go to between now and then? Okay, looking at the Hang Seng. The Hang Seng is starting to find this little cup and handle. It's more rangy. It's probably going to open up, gap up slightly above that 27.30. We're probably going to be looking into that, was it 21.215? These highs from previously, okay, this sort of higher level. At the moment, we've got a nice little higher low holding. That trend down, this got hammered here. We bounced back and it's been the grind. So a lot like the DAX, okay, had a big sell-off, bounced back, and the next sort of selling phase, it didn't really, you can see it starting to get into lows, good bounce back, got through these lows before we started to bounce back, holding a higher level here at 19,920 and started to bounce back. So it's looking to me like it wants to head up to this, like I said, 21,220 area, okay, these previous highs. Okay, onto the Nikkei. And Nikkei has been, it's been relatively weak compared. Now that's going to obviously gap up as well. You still got this resistance at 27,040 on the index, even though the the CFDs and the futures might show something slightly different, but we're getting this move down is still in force at the moment until we break up and through that 27,040 level. Okay, so I'll just get rid of that. So for me, at the moment, we're just going to wait and see how that goes. It could be that it just keeps testing into that level and fades. We might still get some sellers coming in. At the moment, it's getting held up at around that 26,590 area. Okay, onto the currencies, we look at the dollar index. Now the dollar has been sold down. Okay, we've got major daily highs up here, and we've spoken about this quite a few times now. It pumped up through when they were talking about a more aggressive Fed, maybe overshot the mark up into this daily resistance area. Okay, overshot the mark. Now we're coming back down. Once the Fed, they were talking up being a more aggressive, but they're just not doing it, and then they turn around and say maybe we're gonna look at it. So they're really the key is to keep this high inflation, but don't let it get out of hand, and don't let it essentially kill the consumer. These higher inflation rates, if it keeps going up, consumers just going to die, okay, because they're spending too much money on bills as opposed to just spending to buoy that economy. That's the general move anyway. So as long as the Fed are quite happy with inflation around 8% or so, it might be painful, but it's still going to keep the consumer spending, which is going to continue to buoy the economy, keep those economic numbers quite good, and support the economy. Why the market is just starting to get used to these higher inflation numbers, and we're going to get these interest rate rises through over the next year or so. Okay, but if they have to raise harder because of higher inflation, that could really start to kill the market. And they're probably, they're really concerned about a big sell-off. Obviously, they don't want this market to start taking a nosedive because they're getting it wrong. All right, so that's kind of the balancing act they've got to deal with. So the US dollar has come back down once they looked at maybe we've overshot the mark, obviously, through that daily resistance. A lot of bulls exiting those longer positions. And plus you've got other things like the euro bouncing hard, which was buying into the euro, offset was going to be selling into the US dollar. And that's what's also pressuring this dollar down. It's not just pure US dollar selling, it's obviously US dollar selling because of the euro bounce, okay, that we've had, and the ECB talking up interest rate rises. So for me, are we going to be going lower? This 101.68, maybe this has got to be extended on the downside now. So the market will never go to equilibrium perfectly. It's always going to overshoot up, overshoot down. Maybe we're overshooting down at the moment. We'll just have to wait and see. Bond yields are actually climbing. Bond yields are falling and bonds are rallying. So it is, taking some pressure off those dollar bulls. All right. So just want to see, it is looking like it's going to roll. We've got momentum starting to fade at that zero, which means we're going to hold another lower high potentially, and we're going to start to fade, back below this 101.68 area. Okay, that's what the market's looking like at the moment. We start to hold it and start to pick up, then you're going to see momentum start to tick to the upside. We're going to start taking out these 101, so 102 area, those most recent lower high. Then we're going to start to push back up to 102.38. Okay, for now, we have to wait and see. My favorite saying. Okay, the euro. You've seen that nice little buying into the euro, bit of a sell-off here down to 106.47, and then we bounce back. Okay, so it looks like it's still chugging its way higher, grinding higher, and potentially into this daily resistance around that 108 area, holding its higher low at around 106.96. So for me, as long as this holds here, we start to tick higher, we're going to take out these highs, and we're going to keep pushing up. Okay, if we start to roll here, then you've got this kind of a flush in play. Okay, so you've got high, good pullback there. It's a good solid pullback. Now we've got this move back up into the high, it started to fail. We've retested that level at 107.46 and we're failing again. So really it's about what the dollar does. As long as we're sort of holding this zone here, if we hold that zone there, then it could just contract, hold a higher, little minor short-term higher lows and lower highs before we jam straight back up again. If that starts to break, then there's going to be a big shift and we've got an RTF or double top up here potentially. And then you're looking into this 106.47 and potentially lower. Okay, pound. Pound is, it's working its way up, 26.05, and as long as that US dollar is hanging around the lows or even looking like it's going to go lower, we're going to be pressuring higher. So you get your sort of minor levels here just to contend with. There's a little low, high there, and then we've got another little higher low, probably in here at the moment. So it's sort of that low at 125.86 and this high at 26.53. Now, if we punch through that high, expect it to keep extending and maybe extend into this longer term resistance through here at around this zone anyway, at around 127.25 or thereabouts. Above that 127 area, it could just extend. Okay, so at the moment that momentum's up. It hasn't broken any higher lows. It's still holding the anchors to the uptrend. This is the recent anchor to that uptrend is around 125.55, 54, 55, but it's looking potentially to hold another one. Okay, and it's going to depend on what the US dollar does. The Aussie's extended. You got initial leg up, another secondary leg up, and it's just starting to get into that zone now. So there's no doubt it's getting a bit extended, but it's stretched on the upside. If that moment starts to fade when we're up at this level at 71.71, then we'll just have to wait and see. But I think we're extended on the upside to buy. The trend is still up. If you're going to do that, you just got to, if you're happy to buy, then you've got to realize that we are potentially extended. Where we're going to go to from here, we could still jam higher up to the 72.61 area. You may start to find these little minor previous lower highs and then start to come into play. But for me, I'm really just looking to, I just want to see if we can react down and off that, because I want to see a bit of a squeeze. If you can see a squeeze, it may take out some, and again, hold a major higher low, but at least you got some fat on the downside to trade on the short. Okay, US yen. We'll just start to wind it up here. US yen is still holding. Okay, there's no real love into the US dollar at the moment with regards to safe haven, so that's not really, and there's no love into the yen from safe haven. So there's shorts still in play on the yen. They're not, you're not getting out just yet. Okay, and that's what the major market's worried about, is that big squeeze lower on the US yen as a pair. Okay, but at the moment, I think it's really dependent on that yen, the shorts getting squeezed out and really sending this pair lower. Okay, and depending on what that US dollar does, of course, but there's still going to be chop. I think at the moment we're just sort of chopping around that 127.04. You can see these little high lows holding, but also lower highs holding. So it's a bit of a squeeze at the moment. It's going to come to a point of agreement soon. It looks like it wants to pop up. Okay, and that to me, it could be a bit more bullish on the US dollar. If this US yen starts to look bullish, okay, then there's a chance that the US dollar is going to start to turn and hold those levels we were just talking about before. Okay, gold, not looking so crash hot, to be honest. You've got first leg up, secondary leg up. It's starting to, that this move up here, you got higher low, higher low, higher low. High low is now broken. Okay, so what's going on there? It may be that if this is pointed to that the bulls into gold are getting a bit more skeptical as we get up to this 1867. We're fading off the 1867 area. They may be skeptical that the US dollar is going to continue down, and it needs to continue down for this market to continue up. Okay, so it may be that we're just going to start to find a bit of a line in the sand at 1867, and it's really going to be a bit choppy, but it could easily for me roll over, because we have broken this leg up here, this major leg up here. We've broken the anchor, okay, to that uptrend, which potentially means a bit of a squeeze. All right, we'll see. Oil is it's pressing higher. We're looking at that 116. It's got this little lower high in here that could be where market sellers react. I would expect they're going to extend on that and press to 116.40. But for now, that momentum's up. Look at the copper. Now, copper is, it's not looking too bad. You've had this big squeeze down and the market's starting to recover. So if this is going to be the high low holds, you can expect it to take out that 435.40 area and start to pressure back into that 445.40 area. Okay, let's just finish off on the cryptos. You can see this is we've got Bitcoin here. It's looking a bit better that it's going to hold that 28,500 area. But it's not out of the woods. You've still got lower highs holding. It's just that sort of your trend line down. It's broken. We may grind up and start to hold some of these inside levels, these lower highs, and then roll. Okay, but either for me, they're not finding the love you would expect, because they were following the indices for quite a while. Now that it's broken around that 30,000 mark, I think it's scared a lot of bulls back out of the action. They've probably been burnt quite a few times, with margin and things. So it's going to be interesting to see whether this gets range bound between that 30,640, these highs up here, and 28,500. Or whether it's going to take a turn for the worse and head south. Ethereum doesn't look quite as good. Okay, so to me, that trend down is still intact. We're into a daily support zone. You can see this big spike low, rebounded. It's still pressuring down into there. So shorts are in force at the moment. Momentum could easily take a nosedive from here. We'll just have to see how it goes today. But it's not finding, like I said, the love. As US indices rally, it's not finding the love you would think. Okay, now if the indices start to take a turn for the worse and they start to head south, these markets are going to start to head south. All right, guys, better finish up there. Thank you very much for joining me. If you like what you hear, it'd be great if you can leave us a like, help us spread the word. Look at our website, www.tradethestructure.com. More free stuff on there. Join the community. And if you've got any questions, just feel free to email. It's all on the website. All right, guys, we'll speak to you again soon. Bye.